Welcome to TheoTrade. This is Don Kaufman. It's July 14th, 2016. You are watching the Theo Night video. First and foremost, today, now, S&Ps with about 25 minutes to play in the period are up about 13. I think the only way to really describe the broader markets right now is frothy to the upside, which ultimately entails just, again, a wild and staggering move from, roughly speaking, the 2,000 level in the S&Ps directly up to 2168.99, where pretty much they currently reside right now. Again, to look at that type of a move, we're talking, for the most part, 170 S&P points directly to the upside. What do we have? And albeit a brief pause for a few days before exploding even further to the upside. But again, market feels a little bit frothy. What am I basing that on? All right, so one of the strongest products that we've seen throughout the course of this rally is showing a degree of weakness right now. And you guys know that I'm not necessarily just into pure direction of the markets, because I think it's a little bit of futility. Where's the S&P going to be tomorrow? I don't know. Bank of America is coming out in the morning. That could actually change our mind entirely. That is, Bank of America is coming out with earnings. We saw JP Morgan earnings today. They were solid, right? It's actually driving the financials, and the financials happen to be, well, they're the strongest sector. B of A comes out, doesn't look good, could change our entire feeling. However, looking at markets, and you try to be as objective as you possibly can. Now, I've mentioned time and again, I'm short for the long haul. However, in the shortest duration here, we're seeing a bit of divergence. And this is where, again, you can't always use technicals. What are you going to use in technicals? You're going to use stochastic, you're going to use a MACD. I don't care how many technicals you're going to use right now. All of them are going to display overbought, overbought. You're overbought to the umpteenth degree. We've had a 170-point move up in the S&Ps. Nevertheless, I look at the Russell, because it's been at the forefront on a percentage basis. It's really been at the forefront of a huge amount of this move lately, and it's fading today. So it's up, well, negligibly. So we'll keep a very close eye on that situation. However, again, earnings are going to be driving a tremendous amount of order flow in the coming days. Speaking of order flow here, as you look down the list of the usual suspects, and again, individual stocks right now, hey, there's nothing to talk about. They got earnings in like a week or two, so you get, again, this awkward pause point in the market where you're like, well, what should I do? And on a day-to-day basis, the earnings are going to drive the order flow, okay? And from there we go. You know, earnings come out, they're good, they're bad. We'll see. Again, a bunch of banking stocks coming out inside of the next few days, both Friday, of course, tomorrow, and Monday of next week. It's like super bank week in terms of earnings. Nevertheless, the Russell I keep keying into, again, with 20 some odd minutes to play in the period over here, we're seeing just some signs of weakness come into the S&Ps. Now, on a totally different note, I initiated a trade today, and I want to display that. Okay, a little bit about trade execution. One of the ways that I go when I find trades is I'm not, again, a big market technician. And I'm going to actually close up the left side bar here for just a moment so you can get a better look at this. I'm not a big market technician because, as I said, if you want to go look at a couple of technicals, that's fine. Everything's going to pretty much show overbought, overbought, overbought. Momentum to the upside. Can't possibly sustain it, but it can, and it has. So I use a much more, what I would term, quantitative scan. The scan over here, first of all, I scan in the weeklies. Okay, I'm looking at the price within 2% of the 252 period high. That's 252 trading days, which is the equivalent of what? 1 year. All right, 252 trading days is 1 year. The close is at least 3% greater than 10 bars ago. Bars are days, and earnings does not have earnings anytime in the next 35 bars. What's a bar? It's a day. So I hit scan. What do I come up with? The 24 wonderful products that I've actually been kind of sifting through. Many of them are related to major ETFs like GDX, although Lulu's on here. Anyway, I cruise through and I look through literally like all the products in this list of 24, one by one. I've already got a position in Costco for better, for worse. But one of them that really stuck out to me was Pepsi. And this is the candidate that I actually went with. So, yeah, I don't use technicals per se, but I do use scans. And if I wanted to add technicals to my scans, then so be it. It's just easier. It's more efficient. And I just got to drive that home to you, that I'm not against charts. I'm not an anti-chartite. Okay? Rather, I just feel it's more efficient to scan for everything that you're going to do. Pepsi's had an absolute staggering breakout to the upside. In fact, this is on a 9-month, but respect even a 3-year. Okay? The largest move we've seen in 3 years for the most part. All right? Here we have a move back off of an earnings announcement where we gapped a little bit higher. But then I even brought it up in like a 10-year monthly just to show you the magnitude of the kind of move that we're seeing right now inside of Pepsi is comparable, okay, to one of the largest moves it's ever seen in the history pretty much of this stock, which is, again, long history. I even went further than 10 years when I was looking back in time. So what did I do? Took the other side. I'm a contrarian in respect to using a strategy, all right, that just looks for, hey, in the short duration, can this stock back off? And this looked kind of like a key reversal day. If you are into technicals, come on! It's the doji hammer! Well, market's not closed yet today, but in 18 minutes it'll be closed and it'll be a doji hammer. So I go and I initiate an in-out spread. What's important over here, you can see the open interest was 0. So it was 0. Well, myself, some of our clientele, we did the trade. We're up to about 515 contracts right now, and there's still a lot of these things working. But what does the in-out spread actually look like? It happens to be, again, you can see I've traded a couple of them as well, but it happens to be a 111, 109, and I'm buying the spread. Now, I went out there, and you can see the price of the spread's moving right now, but I went out there and purchased this thing for 84 cents. Okay, so for an 84-cent debit, so my maximum sustainable risk, okay, is about 84 cents in the trade. Now, this trade, even though I'm explaining it here in the evening, it'll still be there tomorrow. It's okay to even pay 88 or 90 cents for it because obviously the market's in motion here. We'll see where, again, market's open tomorrow. May have another opportunity at this, but it's a 111, 109. It's a debit spread. I am buying the spread. It offsets the volatility risk, and I need us obviously below 109 for profitability. I'm not looking to kill it on this particular spread. All right. In reality, what I'm trying to do is I want to make between 55 to 65%, okay, of the initial debit, which means I'm going to basically buy the spread for about 84 cents, and I'm going to look to close it for approximately $1.30. And you can even use what's called a GTC on the $1.30. So you're buying it as a debit. You'd be selling it to get out of the trade GTC for around $1.30. That's it. So why the 55 to 65%? Because there's an incredibly high probability of touching my profitability point, all right, between now and, of course, 43 days from now. And you can play around if you're on Thinkorswim, fantastic. If not, it's okay too. You can play around with the idea of what's called probability of touching. Probability of touching. Even look all the way out to the 108 strike. Now I know we need us below 109, but there's still a 66% chance of getting to 108. That will almost give us our 55% profitability. And that's really what I'm looking for ultimately in this spread. So as we come closer to the close of the market, as I said, the only way to describe this market is none other than frothy. Okay, the Russell, 15 minutes to go to the close, has backed off even further. How often do you see the S&P's up 11? The volatility is relatively flat. The usual suspects, this doesn't make sense. Again, a lot of what's going on in the market, heavy volume early in trade, volatility not backing off over here, and the Russell down on the day. Looks like the S&Ps are ready to possibly roll over. However, a lot of the order flow coming into tomorrow morning is going to be highly dependent upon what comes out of a few of these banking stocks and their earnings. Thanks everybody for joining us here at TheoTrade. My name is Don Kaufman. Be back this weekend.